Hey guys, welcome to Mercury Investors. This will be our first lesson in our technical analysis trading program. We created this program for those individuals who want to learn the markets and trade with a little bit more confidence. The course is being taught by a great friend of mine, and he's going to be your mentor throughout the program. I hope you guys enjoyed it as much as I did. And if you have any questions, make sure you check out the Discord channel.
In this chapter, we will go over how to make a consistent income, how to potentially become financially free, how to read and understand financial markets, and most importantly, the main reason that we're all here, how to profit from trading the financial markets. So a bit about myself. I've been trading the foreign exchange markets and commodity markets for about 3 years now. I started with £200 or dollars with a signal provider who didn't really know what they were doing. So in the end, I came to the conclusion that it was better off me learning how to do it myself than following someone's blind trades. I've gone from taking little 10 pip trades and taking any profit I can get to making huge 100 plus 200, 300 and even 500 pip trades regularly. Here are a few examples of the trades that I took this fiscal quarter actually. Here you can see Great British Pound, Japanese Yen, which I entered right at the top, round about here, as you can see from the trading view, matching there. And I rode it out for about 2 to 4 weeks, I think it was. And I held down and I almost profited 500 pips in the end. That's why I really like this trade, because my analysis was really good and it profited hugely. Here's another example of a trade I took. US dollar, Canadian dollar. You can see I sniped it on the wick and I rode it down for another 230 pips. And you can see the risk to reward ratio of this one as well. The previous one was about 11 to 1. This one's 4 to 1. So you can see the bigger your trades are, the bigger your reward is and the more you'll make. So in chapters 1 to 7, we'll cover, of course, the introduction, candlesticks and chart patterns, support, resistance, key levels, and trend lines. In chapter 4, we'll cover multi-time frame analysis. Chapter 5 will cover indicators. Chapter 6 will cover how to actually manage your trades and when to know how to enter them and take profit or to cut your losses. And chapter 7 will be the conclusion, where we effectively put all of this together, and hopefully by then you'll be confident in your own analysis and looking to do a lot of this on your own without help. So 100% win rate. Is it possible? In as few words as possible, absolutely not. With trading the foreign exchange markets, there are so many different variables that can impact the direction of a trade that it's just not possible to predict the right outcome 100% of the time. Things such as scheduled news, stuff like interest rates being released, non-farm payrolls, can hugely impact the market. And let me explain to you why. So when you trade, when there is news coming out, such as interest rates, you'll see the market gain a lot of volatility. People will tend to put their money in currencies that have nice interest rates because it means that they can get a better return. So when, for example, the US dollar and the US bank choose to increase their interest rates, you'll see a lot of demand for the dollar and you'll see the price of the dollar shoot up. If they were to cut interest rates, you'd see a drop in demand and the price of the dollar would go down. Things such as major events, such as this past few weeks, we've had Donald Trump threatening war with Iran, which has seen a huge spike in the value of commodities such as gold and oil. You have banks coming in and exiting the market, which is why there's a lot of liquidity at times. And banks basically get the market moving because they're who brings the big money. You don't want to be trading against the big money because they'll just push you out of the market as quickly as they can. So here's an example of what happens when news of war is effectively in the air. So you can see round about here, that was when the war talks started, and you can see the value of the gold has actually pushed hugely against the value of the US dollar. This is because when there's uncertainty, people tend to put their money in commodities because they're safer. And you'll see the value of the commodities actually rise. So here is where it all started, and here is where it peaked. And that's over 900 pips, as you can see there, 940 pips. And that is a lot of money. That's enough to take you out of the market probably about 20 times at once. And if it all happens in one run, even if you do have a stop loss, there's a potential that you could get a slip and you could lose a lot more than you initially prepared for. So here's an example of what you'll hopefully be able to do by the end of this course. As you can see here, we have a trend line, which we'll be going over in chapter 3. We have Fibonacci, which we'll be going over in the indicators chapter. We have resistance and support here and here, which we'll be going over in chapter 2, I believe. We have a key level here and key level here, and we put it all together, and you can see a nice trade which came up to 323.7 pips with a risk reward ratio of 6.13. So that means if you risk 1%, you get 6.13 back. If you risk 2%, you get 12.26 back. And 3%, of course, onwards from there. But you do want to stick to 0.5 to 2% risk. So, what is there in chapter 2 to look forward to? In chapter 2, we'll be going over candlesticks, the types of candlesticks, the formations of candlesticks, chart patterns, and how to actually implement them in your trading and profit from them. This one's quite interesting, and it's probably really important to getting a good entry on the markets, because more often than not, price will tell you what you need to know about the potential change in direction or the next move. So I appreciate your time. Thank you for watching, and we'll see you in chapter 2.